Hey everyone, John Hunter here, slingshotfutures.com, and welcome to the Market Pulse. This is where we take a look at the market moves in the bigger picture so we know what to expect going into this upcoming week and potentially months, depending on the setups that happen. So first of all, we're going to take a look at gold on the weekly chart. Now, gold on the weekly chart, we're still consolidating in the bigger picture. We're forming a very, very large wedge, and we're cycling off of the top of that wedge, right? Connect point A to point B, and that gives us a C point right there. Now, the interesting thing that happened here is we pushed up into the top of that area and we formed another teeny tiny little wedge and we aggressively slammed outside of it. Now that big drop lower, that is a big clue. That is a complete failure of the wedge to continue. Normally you'd expect something like this to be kind of like a pennant formation where you get a big pop up, it pennants out, and then you get a continuation leg to the upside, and that didn't happen. Very frequently, when the market is surprised like that, not only will you see a big move, but the market will usually utilize a two-legged type move. They'll get a push down, they'll pull back a little bit, and they'll get a secondary push down as everybody realizes what happened, and they jump on the train to pile drive the market lower as well. So currently, given this massive downturn that gold has had off of the major wedge top, that's something that we need to be keeping an eye on for possible shorting opportunities to drive the market lower and keep the train going. Now, if we look backward a little bit here, we can see that we were forming a little wedge right here, and that actually even tightened up to a smaller wedge, and those areas will be remnants, right? Those will be areas of prior support and resistance that will turn into areas of interest if we can go back down and test those locations. Now, that's going to be probably a couple weeks, but we can see if we zoom in nice and close here, this last pop higher, first of all, the massive bear candle did follow itself up with bearishness, and now we're seeing a weak bull candle. It did close slightly above the prior week, but not by much. So the main objective, if anything, if the buyers are trying to come into this, would be to retest the bottom edge of that earlier wedge before finding selling pressure. But the game plan for the bigger picture here is looking for continued downside momentum, especially after a candle like this that's pointing to the downside very, very aggressively. Again, there will be early sellers who are looking to jump in and just right now, right? That's the first bull candle we've had, sell it. Right? Now, the more conservative approach would be waiting for this bull candle to maybe trigger above, or maybe waiting for the retest of that earlier area of interest, right? See that retest, see it fail, and push back down to the downside. But either way, the objective right now is for sellers to continue driving the market a little bit lower. Now, when I say a little bit, keep in mind this is a weekly chart, so a little bit is a lot of bit if you're used to looking at smaller time frames. But overall, that's what the anticipation is on the weekly chart here for gold. Now, if we zoom in a little bit closer here on the daily chart, we can really see that just slam lower. This is the wedge that was forming right inside here, and they just dunked that thing lower. Very aggressive downside momentum. Now, this gives us an even easier sight on where to expect the market to turn around, right? If you're looking for that more conservative area of interest, that pushes that market up into, going into that 1300 level again. And it wouldn't necessarily be a surprise, given that big round number just is an area of interest regardless. So around that 1300 mark or so would be a very big area of interest, along with just cutting across there and retesting that breakout point, right? They slam underneath it, they come back, they retest that point of interest, and then turn back down for that possible second leg lower. Now, this breakdown does have a couple different things in gear for it. First of all, again, waiting for a slightly better interest in terms of selling, waiting for better prices, doesn't necessarily hurt my feelings. I think a lot of people would love to see this pull back even further. But the problem with that is this has been so aggressively bearish so far that you may just find sellers selling for any reason they can get their hands on. We can definitely tell that the sellers had a little bit of trouble at the bottom. They failed at the lows, but they were still able to close it bearish. Now, the one thing that really stands out here is we do have a decent amount of bullish pressure coming in here, and that was a very nice sell signal for the sellers, and they closed it bullish, right? That's a little bit of an issue for that sell case. So in terms of, this bullish move being done, they may be waiting for a second leg completion, which we're probably right around. They may just be waiting for an EMA test. That would be the next area of interest. In terms of potential further areas of interest, you'd be looking for locations right around, just underneath that 1300 mark. But again, with that big round number looming right around the corner, it's probably going to start acting as a magnet. But either way, still looking for the downside for gold. So jumping on over, let's take a look at crude oil on the weekly chart. Now, crude oil on the weekly chart we're still kind of figuring out what we want to do here after this massive slam lower. This was back in 2014 towards, mid to late end of the year, where they pile drive that market down from above 100 all the way down into the 50s now where we are. In terms of the overall objective to the downside, with this big of a move lower, you would definitely anticipate a second leg down, and that's what they got. Now we're starting to see a correction. Now, the correction that we're seeing piggybacks off of this $40 to $50 area. This location, $40 to $50, this has been a massive area. If you pull up a continuous contract and look back 10, 15, 20 years, you'll see this level acting as support and resistance even in the 1980s, okay? So this $40 to $50 mark is a huge area of interest, especially the $40 level. This is where you're going to see hedge funds and big banks and all of those guys jumping in at the $40 mark to hang on to it to see if it'll go back up to 100 because it's so cheap. Now, on the weekly time frame, with that big drop lower, we did start moving into a spike and channel down. And if we look a little bit closer here, we can see the sellers may have overdone it just a little bit. They pushed down aggressively, they pushed down again aggressively. You can tell the buyers tried to hold that low, and they slammed underneath it. Now, a lot of times when you get that big dunk through one side, it's going to do the same thing to the other. So although this area is of interest, right, drawing off the lows, copying it to the highs, that's an area of interest to find selling pressure off of, and it did respect pretty well. But the fact that they blasted through the bottom here, you'd expect about the same distance of a blast through the upside here. And notably, this major swing area around here, this you can see kind of clustered around, that is going to be an area of interest as well. So likely you're going to see sellers that want to see this go higher, which paves the way for the buyers to take it higher. Now, if we dial down to a slightly faster time frame on the daily, we can really see that bullish nature coming into play, but we can see a couple red flags here. We have that coming across the top here, possible wedge top, and it did hold very nicely. The one thing that I really like about the continued upside pressure here is simply just the fact that the sellers tried, and when they tried again, all they managed to do is get trapped on the low and just slammed higher. So there's a huge amount of bullishness in the market still trying to drive the market up. Now, maybe they were just looking for the $50 mark. Maybe they were just looking for the top of the wedge and they may be done for a little bit. But either way, we can't ignore the fact that this is a massive amount of bullish pressure. And on any decent pullback, you're likely going to find a lot of buyers interested in trying to take this further up. So really any pullback, especially to the moving average or maybe just back to the $50 mark, will usually find a lot of buyers to continue that drive up. The major objective here is to go back up to that cluster area that we saw in the weekly chart, and that area is between 56.50 up to 62.52, and that will be the big do or die zone for the sellers to try to take the market back down in the big picture, which could be months from now, going into mid next year before we see that happen. But that is the big area of interest. Now, switching gears over to the S&P. The S&P on the weekly chart, we're seeing this just obviously a gargantuan run higher. This move up hasn't stopped since 2009. So it's a very bullish move and very reminiscent of crude oil in that it got a little overzealous up at the top. But the big thing that we're seeing here is after that massive blow through the highs, they couldn't even get back to the lows, right? So that's a very bullish indication. We saw this big range kind of stepping up and really halting the market in all of its attempted movement to the downside, and they couldn't even complete the rotation down to the bottom of the channel. So the buyers are very obviously interested in this location to try to take it back up towards the highs. Well, they got their objective. We've breached the highs, and now we're breaking out and we're attempting to pull back to it to hold it. They had a strong first hold. If they can manage to get a secondary push back up off of that level, you will likely find a lot of buyers that are trying to continue this up in what I guess you could consider a slightly more aggressive wedge, looking at these lows here into this right here. And their objective would be right to the top of that wedge. So if we can get a strong area of buy support off of that major swing high, you're likely going to see another attempt at the highs to try to get that move going. Now, again, it could be really steep right here. It could be a little bit wider across right there, or it could be the widest one, which we already have marked up right here. Either way, though, the buyers are still anticipated to attempt at least to take it back up if we get another strong sentimental bounce off of this area. Now, in terms of the daily chart's giving us a little bit more information here. This one has the steeper of the options that we were talking about, and the highs very obviously holding really nicely across the top, even leading into a double top and then a failure with a huge push down. Now, the big thing that's standing out here is that massive push lower. We have yet to see the sellers take it back through the bottom. And in fact, they actually ran into a huge amount of support off of the low edge here of that possible wedge bottom. So with all of that big support coming in here, the buyers really need to show up, because right now they're not proving a whole lot. If we look here, the bull formation, they haven't been able to get a good bounce yet. When they tried, they completely failed. And notice where all of the failures are coming? Right around that cluster of support that we had here. The market got stuck on this little shelf. They broke underneath that shelf, and now they're retesting it as resistance. That's a pretty big clue that the sellers may be trying to scale in to potentially drive the market back down, something along the lines of an AB equals CD leg to the lows. Now, if we do get that type of push back to the downside, the major objective area of interest for them is going to be between 2082 quarter down to 2061 quarter before we start seeing those buyers push back up and try to at least attempt to get back to the highs. By that point, though, if we do get that push lower, they may run into that area wedge top as potential resistance. So something to keep in mind on the daily chart. So that's going to do it for the market pulse for this week. For you lifetime members, make sure to tune in to your course material. We're going to go over all of the in-depths and how we're going to approach this in the upcoming week. For you folks on YouTube, hopefully you enjoyed it. Keep an eye out for this upcoming week. It should be an interesting one across the board here, and we will see you all next week.